Good afternoon. This is Dale Snyder with the Snyder Group at Keller Williams Realty here in Las Vegas, Nevada. Today's discussion is going to be going over what's happening in the real estate market from the investor standpoint. There's a lot of stuff going on with Bank of America, Fannie Mae, trustee sales, notice of defaults. So we're gonna go through all of that. Then I'm going to give you my professional opinion of what you can do to strategically capitalize on getting the best investments in today's market. Okay, so let's start with what's going on with Bank of America. As many of you know, Bank of America is the powerhouse behind all of the mortgages in this country. You've got Bank of America, Chase, Wells Fargo, Fannie and Freddie. They control probably 90–95% of all the mortgages in this country. What's interesting to note for you as an investor is that there's been a big settlement between Bank of America and Fannie Mae. The Bank of America is going to be paying Fannie Mae a cash payment of $3.6 billion to take back $1.4 trillion worth of, I guess, toxic loans in default that were originated during the boom years. So in addition to this, Bank of America is also going to be giving up their servicing rights on over $3 billion worth of loans. So that's approximately 2 million loans nationwide. As many of you may be aware of this already, this started taking place in the third, fourth quarter of last year, where Greentree and Ceteris took over the servicing a lot of the Bank of America portfolio. And the reason is simple. Bank of America is just trying to get more profitable and leverage what they can. So that is why they're doing this. So if you're in a short sale right now as an investor looking to buy, or maybe you're an investor short selling some investments that went bad, there is a good chance that that short sale process will be starting over when the servicing changes. What this means for you if you're an investor looking at getting into the market, prices have gone up drastically and your return on investment has gone down tremendously to where if you're looking in prime areas, you're looking at breaking even monthly, not getting a cash flow. This could open up the market a little bit more with some of the short sales coming in the pipeline. So let's jump into that sector now. The trustee sale report. We get this every single day. So we're able to provide this to you if you would like and you find valuable in this data. So let's look at Friday, March 1st. And keep in mind, Friday is the biggest day at the auction. So there were 222 properties that came up into the auction block. Of that, 18 or 8% sold to a private party, which are usually investors that are going to flip those back onto the market. 23 or 10% went back to the beneficiary or the bank. So those will be coming back as REO or bank-owned properties down the road. 71 or 32% of those were canceled, and 110 or 50% of these sales were postponed. A good percentage of those are in loan modification or they are in short sale. So if you look at Thursday's data compared to Friday's, there were only 84 total properties as compared to 222. So the biggest thing to know about the trustee sale is there are hedge funds in town spending massive amounts of money, and they are buying these properties at retail. So if you're looking at flipping at auction, as some of you may be investors that have done that in the past, the margins aren't there. You have to go into looking at the older product, stuff that's pre-1990, or looking at stuff in the higher price point, around $300,000 and up, and then there's some opportunity in flipping. We've got a lot of experience with that. If you're looking at getting a quick return on your money, my suggestion is reach out to me and we can have an educated conversation on flipping in that middle range, around that $300,000 to $500,000 bread and butter semi-custom range. There's a lot of opportunity there because these hedge funds and a lot of these flippers are not looking at that price point. Let's move to notice of defaults. Notice of defaults are starting to climb again. As many of you may know, that AB 284 law that went into effect back last October, that bottlenecked the foreclosure process. Now with an affidavit simply being signed, the foreclosures are starting to pick up again. So we saw approximately 400, 500 notice of defaults being filed in the month of January and in February. Keep in mind, we don't take the time to scrub the data and pull out HOA NODs. So some of these notice of defaults are not legitimate notice of defaults. And then there are multiple filings as well. So those numbers I'm giving you could be skewed by 20, 30%. But that has gone up drastically. So in summary, what does this mean for you as an investor? The inventory is unbelievably low. We're going to go below 3,000 single-family homes citywide this month. Prices have gone up 20 to 30%. Hedge funds are paying above appraised value by 10, 15, 20% on certain products. So if you're an investor looking at getting the best return on your money, not just breaking even and holding for the long term, you're going to need to align yourself with a real estate team that has a good supply of incoming listing inventory, specifically in the distressed market, which we do. We market directly to those people, and we're going to see a big uptick in short sale inventory, as well as I mentioned with the foreclosure filings, we will be seeing more REOs come on the market. But keep in mind, they're pricing those very high, helping push the market up. So you're going to have to be very strategic, very patient, and align yourself with the right real estate team. And quite honestly, this may not be the market for you. So we can align you with other agents in other markets where your return on cash is going to be higher. So I hope this information was of value to you. Once again, this is Dale Snyder with the Snyder Group at Keller Williams Realty with the March Pulse on the investor market in Las Vegas. Have a fantastic day. Hey, if you like this video, be sure to like it, make a comment, and share it with your friends. Also, we do put out a lot of great data that we can share with you. The Keeping Current Matters, the Altos research reports, and many others. Just reach out to us via email, give us a call, and we'd be happy to provide this data to you.